BlackRock, the world's largest asset manager with over $9 trillion in assets under management, is reportedly eyeing a monumental move involving XRP, and if true, this could become one of the most disruptive developments in financial history, shaking the very foundations of traditional finance and pushing Ripple's digital asset into a completely new stratosphere of institutional legitimacy and global utility. And while no official announcement has yet been made by BlackRock itself, multiple industry insiders and recent blockchain analytics have suggested that significant testing activity related to XRP has been detected from institutional nodes linked to asset management firms. And with Ripple's growing arsenal of strategic partnerships, legal victories, and on-demand liquidity corridors stretching across the globe, the idea that BlackRock may be positioning itself to integrate XRP into its future offerings no longer seems far-fetched, but rather like a calculated inevitability. And let's not forget that BlackRock has already taken the plunge into the world of digital assets, most recently with their Bitcoin Spot ETF, which marked a historic shift in how institutional capital interacts with cryptocurrency. And if history is any guide, BlackRock doesn't just follow trends, they dominate them. And XRP may be next in line to receive the full force of the asset giant's attention, because XRP offers something Bitcoin and Ethereum simply cannot: a practical, scalable, and energy-efficient system tailored for real-world financial settlement. And this becomes even more relevant in the context of BlackRock's broader mission to revolutionize asset tokenization and real-time payments for institutional clients worldwide. And given that Ripple already serves central banks and major financial institutions across continents, including Japan, Singapore, the Middle East, and even rumored partnerships within the U.S. Treasury ecosystem, XRP's role as a bridge asset in this new financial architecture seems more plausible than ever. And imagine the implications of BlackRock tokenizing securities, commodities, and real estate while using XRP and the XRPL for fast settlement. The velocity of money would change overnight. Global liquidity would unlock on a scale never seen before, and XRP's value would no longer be defined by speculative trading, but by its essential role in the plumbing of modern finance. And analysts have already projected what such a move could mean. If even a fraction of BlackRock's $9 trillion is routed through XRP-enabled corridors or tokenized on XRPL, the price impact would be astronomical, potentially vaulting XRP past its all-time highs and into territory the market has only dreamed of. And that's not just optimism. That's simple math, because utility drives value and institutional volume creates price floor resilience. And we must also consider the legal transformation XRP has undergone over the past year, emerging from the SEC lawsuit with legal clarity and court-declared non-security status for programmatic sales, making it one of the few digital assets in the U.S. that institutions can touch with compliance confidence. And with the SEC now increasingly viewed as fighting a losing battle, and Judge Torres' ruling forming a legal precedent, BlackRock could be seeing what so many others have failed to recognize: that XRP is not just a crypto token, it is infrastructure, a next-gen SWIFT, a programmable liquidity engine. And when combined with the push for ISO 20022 adoption and the global shift towards real-time cross-border payments, there are few candidates more ideal than XRP for what BlackRock has in mind. And if this plan is being quietly implemented, the current price may represent one of the last chances to enter before institutional capital floods the gates. And as digital transformation continues to reshape the financial world, BlackRock's potential XRP involvement could be remembered as the moment Wall Street finally embraced the rails of the new financial system. And if that happens, we won't just be talking about a $9 trillion move. We'll be watching the future of finance unfold before our very eyes, with XRP leading the charge. The global leader in blockchain-based cross-border payment technology is reportedly seeking a U.S. banking license, according to the Wall Street Journal. And this move isn't just symbolic. It is a declaration of dominance, a direct challenge to the outdated financial system that Ripple was built to replace. Because this isn't just a fintech company looking to coexist with banks, it's a fintech company positioning itself to become a bank, a crypto-native institution empowered with the legal authority to operate under the most powerful banking framework on Earth. And if granted Such a license would not only catapult Ripple into the regulatory elite, but also give it unprecedented control over how money flows in and out of the U.S. financial system, bridging blockchain with banking, XRP with fiat, and decentralization with institutional trust. Because what Ripple is really doing here is not just applying for a license, it's redrawing the lines of who holds the keys to the financial future. Because for years Ripple has been building behind the scenes, securing global partnerships, winning legal clarity, expanding its reach across Europe, the Middle East, Asia, and Latin America. While at home in the United States, it's faced relentless resistance from the SEC and outdated regulatory frameworks that failed to comprehend blockchain's power. But now, with the SEC's case nearing its final chapter, and with XRP legally declared not a security, Ripple is stepping into its next era, and that era begins with banking. Because a banking license would allow Ripple to offer services traditionally reserved for legacy financial institutions, like issuing loans, custody services, deposit accounts, and perhaps most importantly, operating as a trust for XRP and other digital assets, all within a fully compliant framework, and that means unlocking institutional liquidity at a scale never before imagined, giving Ripple the ability to handle both traditional and tokenized assets with complete authority and trust. And if you think this is just a headline, think again, because it signals a turning point where fintech giants become banks, where crypto-native systems become compliant by design, and where the most powerful institutions on Earth will have no choice but to collaborate with or be overtaken by blockchain innovators who've already solved the inefficiencies they're still trying to understand. And XRP, the heart of Ripple's payment ecosystem, will no longer be just a bridge currency between banks. It will be a core asset held by a licensed banking entity that understands liquidity, compliance, and global value transfer better than anyone else. Because Ripple isn't just trying to disrupt banking anymore. It's aiming to become banking, to reinvent it from the inside. And the implications are earth-shattering. Because once Ripple gets that license, every corridor, every country, every institution sitting on the sidelines waiting for regulatory clarity will now have a compliant, U.S. licensed partner that can instantly enable global crypto fiat settlements. And that means XRP becomes more than a digital asset. It becomes the heartbeat of a new financial system, faster than Swift, cheaper than legacy rails, and smarter than anything built before it. And for every XRP holder, this signals that the final stage is here, where infrastructure meets compliance, where vision meets execution, and where Ripple, armed with a banking license, becomes the institutional giant it was always destined to be, bridging the divide between the crypto-native future and the fossilized legacy system that's finally being replaced, not by a revolution from outside, but by a regulated evolution from within.